All right, so good afternoon, everyone. Thank you for taking the time to join us for our webinar, Understanding the CARES Act and Partnering with Local Banks, presented by Christine Ross, President and CEO of the Maryland Chamber of Commerce, Stephen McAllister, Executive Director, Eastern Region Congressional and Public Affairs, U.S. Chamber of Commerce, and Kathleen Murphy, President and CEO of the Maryland Bankers Association. Before we start today's webinar, I'd like to provide some information on the Maryland Chamber, as well as some helpful housekeeping information. Founded in 1968, the Maryland Chamber of Commerce is the leading voice for business in the state. Grassroots advocacy is at the heart of what makes membership in the Maryland Chamber of Commerce so valuable. On behalf of our 4,500 members and federated partners, we advocate for legislation and policies that ensure sustained economic growth for Maryland. During today's call, we ask all participants to please keep your lines on mute and that you submit all questions using the chat feature located in the GoToMeeting dialog box. We will answer as many questions as time allows and follow up via email with any questions that we're unable to address during today's webinar. Additionally, if you have questions following today's webinar, feel free to send them to mdchamber@mdchamber.org. Finally, GoToMeeting does offer webcam functionality. While our presenters will not enable their webcam, you may feel free to do so. Due to the large number of registrants, the amount of potential webcams in use may result in a distraction. So in the event that you find them to be distracting, you can easily disable them by using the drop-down arrow in the GoToMeeting viewer next to the camera icon and selecting Disable All Webcams. Today's call will also be recorded and available on our website in the coming days. So with that, I will hand it over to Christine. And apologies, guys, there's a few of us here that have control over the slides, so it looks like they might be bouncing around a little bit. So Christine, I'm going to hand it over to you, and Stephen, you have access to advance the slides moving forward.
Perfect. Good afternoon, everyone. This is Christine Ross, President of the Maryland Chamber of Commerce. Thank you all for taking the time to join us today for our second COVID-19 webinar, Understanding the CARES Act and Partnering with Local Banks. If you could mute your line, it would very much help the conversation to be clear for everyone that's on the call today. I hope you're hanging in there as we wade through these very stressful times together, and I also hope you are all staying safe and healthy with your families. We had over 250 people sign up for this webinar today, which really underscores just how important this topic is. We're truly grateful to have two knowledgeable presenters with us today, Stephen McAllister of the U.S. Chamber of Commerce and Kathleen Murphy of the Maryland Bankers Association. At the U.S. Chamber of Commerce, Stephen McAllister serves as the Executive Director of Congressional and Public Affairs for the Eastern Region, which encompasses the 6 New England states: New York, New Jersey, Delaware, West Virginia, and Maryland. He maintains and builds the U.S. Chamber's legislative, political, and grassroots efforts in those states and in Washington, D.C. Stephen, thank you so much for being here to give us an overview of the CARES Act and its implications for our members. We also have with us today Kathleen Murphy, President and CEO of the Maryland Bankers Association, the only professional association representing commercial banks and thrifts in Maryland. The mission of the Maryland Bankers Association is to promote the strength and success of Maryland's banks and our bankers. Kathleen has a wealth of experience working at both state and national associations. She served for 13 years as the Director of Community Banking for the American Bankers Association in Washington, D.C., as Director of Communications for the Ohio Bankers Association, and in the Financial Card Services Division of Bank One in Columbus, Ohio. Kathleen, thank you for taking the time to review financial options and available resources from the Small Business Administration, and to discuss how our members can partner with banks to receive much needed funds during the economic shutdown. After Stephen and Kathleen's presentations, we will have a brief Q&A session. Stephen, the floor is all yours.
Thank you so much. And it seems like a long time ago that I visited you, but it really wasn't that long, but a lot has happened since then, huh? So I would like to go over the CARES Act. I'm just gonna hit on some of the highlights. Obviously, this is a $2 trillion package, so it touches a number of different things. What we'll focus on is some programs that can help your businesses, your nonprofits, and try to. The whole goal of the CARES Act is to keep the economy going, keep people employed, and keep people working. So a lot of these programs are designed specifically for that. So we want to make sure that this information is out there. Everything that I'm going to touch on, I have written down for you, and I will share with the chamber, and they can send that out. So I'm going to talk about a lot of different things, but it will all be in nice, neat, written paragraphs for everyone to look after this. So I have a PowerPoint here. I kind of just use it as a guide. Again, we'll share this with everybody as well, and then I'm going to dive in deep on a couple of different things, and then we will go to our next speaker. So let me see if I can get this to move now. There it is. Okay. So the CARES Act, which was voted on last week, we're calling it Phase 3. Phase 1 was a couple of weeks ago. It was about $8.3 billion in relief, and $7 million was for disaster relief funds for small businesses. Then they had a Phase 2, which really focused on food services relief and the paid leave requirements. So now we're on to Phase 3. And if we have time at the end, we can talk about Phase 4, which we know that they will be discussing when they do return to Congress in a couple of weeks. So overall, it's a $2 trillion package. I believe most people know about the automatic payments to individuals. And then it also expanded unemployment. So it's an additional $600 per week on top of the regular state benefit through July 31st. Eligibility ends when individuals can return to work, and benefits are done through your state unemployment offices. So there's major provisions for employers in this CARES Act. We kind of break it down into 3 different sections. Things that touch all employers, things that touch just the larger employers, and things that touch the small businesses, the self-employed, the independent contractors, and the nonprofits. That's what we'll spend the majority of our time on today. So for all employers, one of the first things that the U.S. Chamber came out in support of was suspension of the payroll tax. It's all about having liquidity and to be able to allow these businesses to stay open. So here are some of the details on that. Delayment of payment for employer payrolls between now and 1/1/21. So the way they have it set up is 50% will be due on December 31st, 2021, and the rest of the balance will be due on December 31st, 2022. This does not apply to employers who have loans forgiven under the Paycheck Protection Program, and we're going to talk a lot about that in a few minutes. There's also some tax changes. Again, you're going to want to work this through with your tax consultants, but here is some information on that regarding net operating losses for 18, 19, and 20. They can be carried back for 5 years. They have some credits in here. So this is all information that will be flushed out as the regulations come out. For everything we're going to talk about in the CARES Act, the regulations are still coming out at this time. So it was passed last week, but the Treasury Department is still coming up with details and information. So we are constantly updating our information at the U.S. Chamber because new information is coming out every day. Yesterday they announced when some of these programs, when you can start filing for them, when the money is supposed to start coming out, and every day new information is coming out. So it's important to stay current. One of the big things that all employers can look into is an employee retention credit. So I have a nice handout which I will send around after this regarding this, but it's an employee retention credit for employers who are closed or partially closed because of this situation. So who is eligible for this credit? Private employers, including nonprofits carrying on a trade or business in 2020 that had operations that are partially or fully suspended as a direct result of a government authority. So if your state told, you have to stay at home, only essential businesses, you would qualify for that. You also have to show you have experienced a decline in gross receipts by more than 50% in a quarter compared to the same quarter in 2019. For your 501Cs, your nonprofits, with respect to this, the requirement to be partially or fully suspended applies to all your operations across your organization. So again, with everything, you want to double and triple check when you're applying for these things to make sure that you qualify, because you don't want to get hit with penalties. So how much is the tax credit for? This new employee retention tax credit is a 50% tax credit for the first $10,000 of compensation, including the employer portion of health benefits for each eligible employee. So the compensation does not include paid sick or family leave for the employer, because that is already going to be reimbursed under the phase 2 of this legislation, that the paid leave. The credit only applies to wages paid after March 12th, 2020 and before January 1st, 2021. So again, it is just targeted for this time frame. You can't go back before this started. I talked about eligibility for which employees count for eligibility. If your company has employees more than 100 employees, they're counting full-time employees who are being paid but not providing a service due to being fully or partially shut down. So if you have a company with over 100 employees and you have employees that are being paid but they cannot providing a service, they do qualify for the credit. But if you have employees that are still providing a service, they're not eligible. However, if your company has 100 or fewer full-time employees, all employees, regardless of whether those employees are providing a service, count towards eligibility. So this is just one part of the CARES program I wanted to highlight, is this credit. How is the credit paid? It's a refundable credit is applied against the employer portion of the payroll taxes. The Treasury Department will develop a process for employers to receive an advance payment of the tax credit. So again, all this is going to come through the Treasury Department. For mid and larger employers, just going to touch on this quickly. And the way that this bill is set up, larger employers are 501 employees and above. If you're 500 or below, you're considered a small business in this legislation. So there are special loans and special credits that you can go through the Treasury Department to help you with these larger companies. So I again refer you to the Treasury Department's website. They have a lot of good information there. There's a $454 billion for loans, loan guarantees, or supports for these larger companies. Now, this is where I want to direct most of my focus on. This is for the small businesses, the self-employed, the independent contractors, and the nonprofits. This includes almost everybody 500 and below. And this is for the Paycheck Protection Program. It's a 100% federally guaranteed loan to small businesses who maintain their payroll during this emergency. What is very important to know about this Paycheck Protection Program is that this loan can be forgiven and turned into a grant if you're able to maintain your payroll or restore your payroll after. So I want to go through the details on this, but the first thing, as I mentioned earlier, everything is getting updated. It's changing every day. So yesterday they announced, if you go on the Treasury website, you can see the application to apply for the Paycheck Protection Program. However, you cannot file yet. You will be doing that tomorrow is the first day, April 3rd, where you can file to apply for the Paycheck Protection Program, and you're going to be doing that with your local lenders. So I'm glad that you have the Bankers Association on there, because it's the local lenders that are going to lead you through this program. So who is eligible for this Paycheck Protection Program? Again, it's a small business, which under the CARES Act is 500 or fewer employees, a 501c3, which is your nonprofits with fewer than 500 employees, an individual who operates as a sole proprietor, an individual who operates as an independent contractor, anyone who's self-employed. There's tribal businesses that fall that can are eligible for this, and there's also veterans organizations, 501c19s are eligible for this. Who is not eligible for this is chambers of commerce. Local chambers of commerce are not eligible for this at this time. If you're a 501c6, which a lot of chambers of commerce are, you are not eligible at this time for this particular program. I will talk about another program that 501c6 is, including local chambers and state chambers, can apply for in a few minutes. So when you decide, you download the application, you decide that you're going to go for this loan that could turn into a grant. What are the lenders going to be looking for? The first thing you need to show is that the uncertainty of the current conditions make it so you have to apply for this loan at this time. All you have to show is your business is taking a hit because of this current crisis. The borrower will, if you use this loan, and I'll go into details of how it turns into a grant, but if you use this loan to pay for to retain workers, to maintain your payroll, to make mortgage payments, lease payments, or utility payments, this loan can turn into a grant. There is a formula for that, which I will touch on, and I know that the local lenders will be working with you on that as well. If you're an independent contractor, a sole proprietor, or self-employed person, you may have to give them some additional information at the time of the filing, including some of your payroll tax filings and forms 1099. What lenders will not be looking for: you do not have to show that you tried to get credit elsewhere first. A lot of small business administration loans, you have to first show that you went to other lenders to get credit. You do not have to show that for this. That has been waived. You do not have to put up a personal guarantee for this loan, and no collateral is required for this loan. So the big thing is, when you're looking at this to see if this is a fit for your business or your company, is you want to make sure, and again, this is found here on the website. I'll go back to that in a second. You want to make sure that you can turn this loan into a grant. So how do you do that? There's a formula, and the formula is the sum of included payroll costs minus the sum of excluded payroll costs equal your payroll costs. So again, I will send this formula out, but I just quickly want to touch on that. Included payroll costs are their salaries, your wages, your commissions, or any similar compensation, payment for vacation, parental, family, medical, or sick leave, allowances for dismissal of separation, payments required for your group health care benefits, insurance, and insurance premiums, and payment of any retirement benefit. That's what they're calling your included payroll costs. What you cannot use, so you have to subtract these, is any compensation of an individual in excess of $100,000. So once you get, for some of your employees that make over $100,000, you're only going to be able to include the payroll costs up to the $99,000. Once you hit the $100,000 threshold, the rest of that salary will not be included. You cannot include your payroll taxes, your railroad retirement taxes, and your income taxes. And you also can't include any compensation of any employee whose principal place of residence is outside the United States. So again, this is a big, long formula. It's much easier to look at when it's right in front of you. if we go back to here, excuse me for, I have a great link here that the U.S. Chamber put this. It's a 4-page document here, which really breaks down the program, because one of the biggest things that you want to do is number 4 on this is how will this loan be forgiven? And again, there's a formula that you have to put in, but the general rule is if you are using this loan during to pay for payroll costs, to pay for your mortgage, to pay for your rent or lease agreements, to pay for your utilities, this loan can be forgiven. So it can turn into a grant, which would be a huge help. Again, there's a big formula here. We will send around this document and the link so that you can look at that, because you want to make sure it's a right fit for you. When you're meeting with your local lenders, you want to go through this, because if you can't retain your payroll, or if you bring some people back to get this program, and then you find out a couple of weeks later that you can't do it, then it's going to drop down, and you're not, the whole loan might not get forgiven, and you may be on the hook for some of it. Again, there's a formula that you'll have to look at, and so it's very important to sit down and meet with your local lenders that you have relationships with, because they can walk you through this. And then finally, another program that I want to touch on is through the Small Business Administration, and this is the Economic Injury Disaster Loans. So you can apply for a loan through the Small Business Administration. These are available right now, today. You can go on the SBA website and apply right then. The Paycheck Protection Program, again, that's not starting until tomorrow, April 3rd. There is an emergency $10,000 grant that is available to all small businesses, self-employed, nonprofits, and local chambers of commerce, and 501c6s are eligible for this $10,000 emergency grant. What this grant is again, the whole goal is to try to keep your lights on, trying to keep your people employed. So they streamline the process for applying for this. So they waive the requirement for a personal guarantee on advances and loans less than $200,000. It waives the requirement that an applicant may be unable to obtain credit elsewhere. They're just going to do a simple check on your credit score. That's how you can qualify for this. So this SBA $10,000 cash advance will be available within 3 days of the application to serve as a grant if the money is used to maintain payroll, mortgage, or lease payments, increased costs due to supply chain disruption, or repayment of obligations that cannot be met due to revenue losses from this current crisis. Again, this is a lot of information that I'm throwing out you. I will provide all of this in writing. There's two parts of this. There's that $10,000 grant that you can apply for help now. That'll come in for free, and within 3 days you'll receive that money, as long as you're using for payroll, for your mortgage payments, utilities. That grant you do not have to pay back. You can go for a further loan through the SBA, through this Economic Industry Disaster Loan Program. There's additional information. It's for businesses, small businesses, fewer than 500 employees, but it also includes the nonprofits. Most nonprofits includes sole proprietors, independent contractors. There are some parameters in here. I'll just quickly go over that. Again, it's much easier when it's in front of you. The maximum that you can receive at this time is a $2 million working capital loan at a rate of 3.75% for businesses and 2.75% for nonprofits, with up to a 30-year term. Payments will be deferred on the loan for 1 year. You can get up to $200,000, can be approved without a personal guarantee. Approval can be based on a credit score, and no first-year tax returns are required. And borrowers, as I mentioned, do not have to prove that they went elsewhere first to receive credit. So there is a lot to unpack here. I don't want to take up the whole time. I know you have another speaker here that can that is, again, a true, it's going to be your partner in this. These independent loans officers, these are the people that are going to walk you through. They're going to be able to talk to you about what is right for your business. We don't want to see people taking out these loans thinking it's going to be turned into a grant, and then you don't make the specifications because you were unable to keep the payroll. People, when you bring people back, there's provisions in there. You have to keep them for X amount of time, until like June 30th. So if you bring them back, but you can't keep them on until June 30th, then all of a sudden, looks like you're not only are you losing that employee because of the economic times, but now you've taken out more debt. And it's not going to be totally reimbursed or forgiven. So there's also a lot of information on paid sick leave that is out there that went into effect yesterday. The first requirement is they're saying you use up your employees will use up their paid sick time leave. There's some details there, and then there's the Family Medical Leave Act, which I'm sure a lot of you are familiar with now. And this is now a requirement. It has taken effect as of yesterday. So I know that's a lot of information there. I know we have another speaker, so I will pause for now and then happy to take any questions.
Great. So Kathleen, I'd love to give you the floor and let you begin your part of the presentation at this point, and we'll have questions from everyone at the end. We are also answering them in the chat box throughout this process. Kathleen? Kathleen, if you'd like to unmute yourself, you'll be all set to go.
Yes, that's what I was trying to do. Hi, Christine. Good afternoon, everybody. Really appreciate having the opportunity to be a part of this webinar. I thought Stephen did a wonderful job in providing, this $2 trillion CARES Act has a lot in it. And so what I want to talk about today is what the FDIC insured banks are doing here in the state of Maryland to assist their business clients. To give you some background, our association next year will be 125 years old. And over that time, as you can imagine, our industry has seen many, many crises, disasters. It's something that our members do is to help their clients through these times. There are 87 FDIC insured banks in the state of Maryland, and they employ almost 29,000 people. We have branch locations all across the state, almost 1,500 of those. So let's see, I'll move on to this next slide. Okay, so as I mentioned, our members have been working with their clients. What I want to emphasize is that the strength and the success of a bank is inherently linked to the strength and the success of their clients and their community. So it is in banks' best interest to work with their clients through these challenging times, and they have been doing that. But if you even just think back to the government shutdown and other flooding in Ellicott City, other issues that we have seen in our state over the years, our members have been there to work with their clients. And also the banking regulators, our members are regulated at the state and the federal level, and they basically are comprised of community banks, regional banks that have operations in multiple states, and nationwide institutions. And what we have been emphasizing since day one of this crisis is, number one, we're in this together, and number two, don't assume that your bank knows you're experiencing a financial hardship as a result of COVID-19. So we have emphasized the importance of contacting your bank immediately upon concerns about making your payments or maintaining payroll, etc. So we have a link on our website, and you can see it here on this slide, to every one of our members' coronavirus resource pages. And every bank is working with their clients in a variety of ways based on their individual needs. The other thing I'd like to emphasize is, just as you all have experienced, banks are businesses themselves, so they are continuing to stay open and will continue to stay open as part of the critical infrastructure, but they are doing so in a way to protect their employees, but also their customers' health and safety. So the other thing that is on these bank sites linked in our website is information about branch access, and importantly, how businesses can make appointments to see people in person as well. And of course, the call centers and all the digital means for contacting banks, but that can all be found on this particular website. So there are, let me see, I think I've jumped up too far. So banks are using a variety of methods to help their customers on a case-by-case basis and based on their needs. So it varies. They are waiving fees. There are loan modifications that are taking place. Payment deadline extensions have been agreed to in some instances. Payroll advances, emergency lines of credit, low and no interest loans directly through the bank, and deferred loan payments, and many other things. Now, importantly to talk about here today, banks are working with the Small Business Administration, just as we do throughout the year in their normal loan programs, but through the efforts of the Small Business Administration and this most recent announcement and release of the Payroll Protection Program. I mentioned the resource page there. So today we're going to focus on the Economic Injury Disaster Loan Program as well as the Paycheck Protection Program. And I know Stephen's covered a lot of this, so I do not want to be redundant. And a lot of what I'm providing is at a high level with the links to where you can get all of the details, because it is a lot of information to digest. So here is a side-by-side comparison of the two specific SBA programs that have been set up to help small businesses walk out of the crisis. And so if you look on the right-hand side here, this is the direct loan from the Small Business Administration. It's called an Economic Injury Disaster Loan. These are the loans that the SBA makes available if there's a tornado or a hurricane someplace in the country. These are typically that's what typically comes into play here. It's a lot more of an application process and a lot more underwriting that's required than will be so with the Paycheck Protection Program. But for the Economic Injury Disaster Loan, again, banks that are SBA lenders can assist their clients with these loans, and they can be used to cover payroll expenses, fixed debt, accounts payable, other expenses that can't be paid because of the disaster's impact. And those EIDL loans can be up to $2 million. There is a 3.25% interest rate. The term can be up to 30 years. And there is not a grant or a forgivable component to those loans. So the Paycheck Protection Program, which literally was just signed into law by the president last Thursday, and the SBA and the U.S. Department of Treasury have worked to release the guidelines for the industry and for businesses. But these programs, and again at a high level, maybe to reemphasize what Stephen just covered, this program is designed to cover payroll expenses, employee salaries, if you have mortgage, interest, or rent, and your utilities, and then any interest on debt that was occurred before February the 15th, 2020. To determine the amount of the loan, you take all of those things and you look at it. Generally speaking, what you would do is look at it over a year's period. On the chat box, people are wondering if the business doesn't have any income at this point. Yes, that is what it's designed to do for those who have seen their income significantly declined or are at basically no income but want to be able to hire their employees back and keep them on the payroll. And what you would look at is your 12 months of your average monthly payroll and multiply that by 2.5, and that would become the loan amount up to $10 million. So the interest rate on this is fixed at 0.05%, and there is a forgivable component to it. So basically, in the first 8 weeks after the loan is provided, the expenses that you incurred during that first 8 weeks would be forgivable. And let me just take you through a formula. So let's say you had a small business that had fewer than 500 employees, and they had average monthly payroll of $150,000, and they applied for a loan through an SBA lender. After a testing, and the business has to do this, to test that the COVID-19 virus has impacted its business operation, then the business gets a loan of $375,000. It's $150,000 times 2.5. So the loan would be $375,000. Over the next 8 weeks, it's determined that the business has incurred $350,000 in eligible payroll, rent, and utility expenses. So that part would be forgivable. So that would leave a principal balance of a loan of $25,000. That would be the amount then that would be amortized over 2 years, which was a change in the guidance that just came out on Tuesday. We thought it was going to be a 10-year term, but it's a 2-year term, and the first 6 months can be deferred. And then, as I mentioned, 100% of the expenses that were incurred in that first 8 weeks are forgivable. And as Stephen said, the remaining loan, whatever that amount is 100% guaranteed by the Small Business Administration. So we have a link here on how you can apply for the EID, the Emergency Injury Disaster Loan Program. As I said, that's a much more, it's a more complex application process than what we're going to see with the Payroll Protection Program. I did want to mention there's been quite a bit of coverage, and I think, according to Christine, there have been questions that have been asked by chamber members about some of the coverage that we've seen in the media today, quite frankly, about the guidelines that have come out, and some of the terms and the conditions of these loans were new to the industry, but we're continuing to work out and get further refinement and understanding of what the full guidance will be. With that said, the banks and any other SBA lenders, so it's banks, credit unions, community development financial institutions, the Farm Credit System, any entity that is an SBA lender is going to be prepared to accept applications beginning tomorrow. And for all of the details on this program, you can go to this website for Treasury. It's called Assistance for Small Businesses. As I mentioned, they're beginning to accept applications tomorrow. We do not know exactly when the funding will begin, but I know that it is the Department of Treasury and the SBA's goal to get the funds out there as quickly as possible. And I just, again, want to emphasize that we are all in this together, and banks are here to help. The most important thing is, and we have been emphasizing this since we anticipated the CARES Act passing, is to let your bank know if you're interested in applying for one of these payroll protection loans. And then many of you, I know, have already downloaded the application and are prepared to go into your financial institution to talk with them about this tomorrow. So any specific question you have and which loans may be appropriate for you, not only through the SBA, but perhaps through the bank itself, it's important that you have those conversations. One of the things I did want to mention is for the EIDL loan program, the Emergency Injury Disaster Loan Program, which has been out for a number of weeks, any business that has applied for that loan prior to the end of the day on the 31st of March can also apply for the Payroll Protection Act program. However, if from here forward, small businesses have to make a choice between the EIDL program or the Paycheck Protection Program. So again, that's a very high overview, Christine. Really, the devil is in the details, and I encourage everyone to go to the Treasury's website, download the application. As Stephen said, it is a very streamlined application. There has to be an attestation by the business that they have been impacted by the COVID-19 pandemic, and then there's a number of other questions that have to be answered there. But the banks that are participating lenders, and those can be found on the Small Business Administration Baltimore District website, Those will be prepared to accept the applications immediately. Other banks that weren't as active, and there's very few, I have to say, very few of my members are not going to be prepared to accept these applications. I know a number of them are on this call today, and as they are also members of the Maryland Chamber of Commerce. So we look forward to having the conversations, being a conduit for this very important program. It is also our understanding that if the $350 billion is basically lent out, that there is at least it's been stated that there would be a willingness to go back to have a reappropriation to continue to allow as many businesses as possible take advantage of this program. So with that, Christine, I'll turn that back to you.
Thank you so much, Kathleen. Would you mind repeating the web address for the folks on the call where they can find a list of the banks that are prepared tomorrow to work with them?
Yes, so the Small Business Administration, so if you go to the Baltimore District Office of the Small Business Administration, and you'll find there a list of the SBA lenders. And it's credit unions, it's banks, it's a number of entities. It's not just FDIC insured banks.
Okay, great. That was one of the questions.
Okay.
All righty. And then I'm not sure if either of you will have an answer to this. I would like to throw it out to Stephen or Kathleen. One of the questions I have had to lay people off for the paycheck protection that we can apply for tomorrow, there was a mention of 8 weeks. 8 weeks after I can reopen my business. What is the significant amount, the 8 weeks for loan forgiveness? They missed that part.
You want to take?
Yes, let me try. So a borrower is eligible for loan forgiveness equal to the amount the borrower spent on the following items during the 8-week period beginning on the date of the orientation of the loan. So it's the 8 weeks starts once you get the loan. And if you bring people back, that'll be part of your application for the program.
Great. And what was said, the other question is, can you repeat what was just said about applying for more than one loan going forward? So if you've applied for the EIDL prior to March 31st, you can also apply for the PPP program. If you haven't,
that's correct.
After April 1st, you can only apply for one or the other.
That's correct, Christine.
Correct. You can only do the loan. You can only get one loan for this specific thing. You can't, get multiple loans to pay for the same thing.
Great. Another question, do the banks require a personal meeting to present paycheck protection application? Kathleen, how are they handling that?
That is my understanding, that the lenders, so basically, banks have many lenders that work with their business clients. So I know that they've been proactively reaching out, but for the businesses here who have a relationship with your bank, whoever your relationship manager is, please reach out to them. At this time, as we're saying, with the trying to keep a safe environment, and generally speaking, there could be an initial conversation over the phone, but they likely are going to require a face-to-face meeting through an appointment at that bank.
So that's the most important thing, is that you call and make an appointment, because obviously the banks are trying to keep both their employees and the public safe. So making an appointment will be key. And then, yes, we will provide a specific link to the $10,000 emergency grant. My team will place that in the chat box here in just a minute. And then, as to how about state programs and loans, my recommendation is that you go to the homepage of www.marylandchamber.org, click on the COVID resources page, and when you go to that page, you will see everything related to state and federal resources. And there is a very robust Business Express website that Commerce, Maryland State Department of Commerce put up, where you can find out about all of the loans that are available. Okay. Other questions? I'm looking through to see. Just one second. The one question, and I'm not sure if either of you will know this, is Maryland going to open their programs to sole proprietors? Currently, the program in Maryland says they must have W-2 employees. Do either of you have any information about that?
I don't, we don't work on the state stuff, so I can only speak on the federal stuff from CARES.
I'm sorry, I'm trying to find where's the question, or what is the question?
So they're wondering if the state loans are going to be open to sole proprietors. And tomorrow we have a call with the Department of Commerce and the Department of Labor, where that question may get answered. But my recommendation is that you go to the Business Express website at the Maryland Department of Commerce and put that question in, and you'll probably get an answer faster than we could get it for you.
So Christine, one of the things I did want to mention is, what's really important is that our members want to work with their small business clients, but they are getting, as you can appreciate, because of their critical role in this whole process, getting inundated with requests for modification changes in terms of their current loans with my member banks, but also with the Paycheck program loans. So our members are doing, I know they're all hands on deck working with their small businesses, but I think that please just bear with them as they work to roll this out. They're working very hard, and they will be accessible to begin to process applications tomorrow for those that are participating in the program.
Yes, for those that didn't see my comment in the box, the guidance from Treasury came out late on Tuesday. And so everyone's just getting through the nuances of that. And you can expect the banks to get up to speed as quickly as possible. But, they're kind of, they're flying this plane while they're building it. So bear with them is really a good watchword for the day. I have one other question here. It's asking about the PPP. Is eligibility based on total employee count or full-time equivalent? For example, is someone who works 10 hours considered 0.25 on an employee?
I'm sorry, Christine, could you say that again? I couldn't pick it up.
So for PPP, is eligibility based on total employee count or full-time equivalent? For example, is someone who works 10 hours considered 0.25 of an employee?
Christine, I believe I think it's all expenses for payroll. So it's what your average expenses for payroll are times 2.5, basically times 2.5 months.
That's what I'm seeing too. It's all employees.
Great. So then if I could just suggest that any additional questions that you have that haven't been answered on the call today, it would really be best for you to sit down with your banker and go through the questions. You could also get on with Maryland Department of Commerce and work through this with them. I think everyone's going to be learning about this as they walk through. And the idea is that everyone wants to help as many businesses as possible. And so perseverance and patience are going to be the watchwords of the day, I think. And with that, I'd love to conclude and thank both Kathleen and Stephen for being with us here today. I want to thank all of the businesses that are online that participated in the call. I hope it was helpful. As we noted at the beginning, we have recorded this call, and it will be on our website very shortly here if you want to go back through and listen to what was there and to see the slides. Those will also be available. Marie, have I left anything out?
I think that about covers it.
Great. Thank you all for being on the call today. We really appreciate your patience with us and your participation, and please be safe and be well. Thank you.
Thank you. Thank you.
Thank you.